Hello traders, this is Sunday the 21st. We are going through the requests for the week. This is homework I do on your behalf. Let's see if we can come out with a few strategies here and there. But let's make the blanket statement that the stock market has never been this high. So that's something to consider from one perspective. You don't want to short it just because. The other one is it's hard to go all in on any stock when the stock market has never been higher. There's still one basket that's lagging, the IWM. They do have another 2% left in them from the momentum from Friday, and then they will have to make a decision. Continue 4% from there to break out or not. And I will have more on this later tonight. The idea is they need to break out from this area, which is about 7% away from where they were on Friday, 6 or 7, I can't remember. So if they have a couple of percent day, Monday, Tuesday, they will need double that or more in order to break out, and then it's off to the races. When I say that, it means don't try to short it. It could be 10, 20, 30%. We don't know. We'll just play it by ear. So S&P, the Dow, the QQQ in breakout mode. The Dow is the biggest one. Q's also super big. The S&P just broke out. And this guy is still lagging. So that's the big picture. Now everything else we say today has to play inside that concept. Okay, so we'll go alphabetical, 3 different videos, and about 110, 120 tickers. Agilent, also you need to know that we have a round of earnings coming. So everything I say, if there's an earnings report within 2 weeks, you know, it's a lot of coin flip actions there on the earnings report reaction. Some good, some bad. You saw what SMCI did. Huge explosion. Unreasonable, but that's what they want to do, so don't fight with it. All right, we go to a daily chart. It has weakness below because of the gap from the last earnings report, and it has a lot of sellers above. So the battle is apparently strong buyers below. How strong and where do they want to retest, if at all, versus the sellers that are above. So if they take out 141, they could get to 156, 157. But which is easier, take out that or revert lower to test some of the weakness from here? I'm asking because that's the question you should ask yourself. So coming into lower perspective here, I think there's a seller at 135 and 136. And there are buyers scattered, but not as strong as the sellers. So the bulls have some work to do. They can do it, they just have some work to do. Alcoa, they just reported, so there's that out of the way. And they're testing the base from which they just sprang. So it's a better situation than the stock before it. This wild candle right there shows you where the buyers are. 25.50 or lower, there are willing buyers. If for some reason you lose 23, which I don't know why you would right now, you would probably get into the teens. But right now you have a strong buyer and a lot of sellers. So if I hold calls, it's from point A to point B. That's what I'm feeling here. If I hold calls, it's so obviously that didn't work. From point A to point B. Okay, so tactical. Apple. I think the market can thank Apple for a lot of the last minute burst last week. Out of the blue, it woke up. It was punished on whatever news, and apparently it got unpunished on whatever news. If anybody is worried about sales for Apple, I think they need to check their fundamental knowledge of things. Apple does not yet have a sales problem. So any headline that comes out, oh, you know, they can't sell this and they can't sell that, it's junk. It's just temporary disruption and the talking points. This is not a starting point for Apple from a technical perspective. Not because it's Apple. There is evidence of sellers. All of these are sellers, so that should be resistance up here. So getting to this neckline, which they lost, is one thing. Getting through it is a different story. So ideally, you want them to see a retest to make sure that they have footing down here, to see if they can come back and take it out via a measured move. So if they do this, they draw a potential burst based on some sort of a cup and handle, which could take them up here. Earnings are coming soon, 11 days. I believe it will move in sympathy to whoever reports first, which might be Netflix this week. So let's focus on all the mega caps like Alphabet, Meta, Apple and company, Amazon to a degree. They will react to however the market reacts to Netflix. And it could be good because they're not willing to sell anything. They'll find good in every story right now. And if there's bad, they'll ignore it. They'll flat out ignore it. That's what I noticed from the price action. So the sentiment is bullish, unreasonably bullish, but it is bullish. So you be careful what you fight. Okay. Just like they were unreasonably bearish just 2 months ago until December 13 came about. And then everybody forgot everything. All right. So we have the opposite of 2022 fear. We have unfear of 2022. 2022, they scared us to death with the Fed. And then December 13, the Fed suggested, I don't think they said it, but we interpreted it as, oh, they're done. And they're friends. They're done, yes. They're not friends. I think that's, but I don't think we'll find that out for another 2 months. So give them rope. ABBV. Strong performance. Okay. So the bulls have an opportunity to just be at like 188 if they want to, but the process is not going to be easy because you have all these sellers from before. So if you can take that out, yeah, you will be up here, which then you have a bunch of more sellers in the way. I mean, it's a bullish chart. It's a bullish trend. Like this word resistance, this is now support and then some. I mean, we have a bunch of supports in the middle. So I'll take this one here and put it right there. It'll work. Take this one here, put it down here. It'll work. Copy it and put it down here. It'll work. And take out this resistance. So the bulls did the job, and now they have backup support in order to chip away at that. They could be at 170, 172. Headlines, 12 days. Airbnb, 141 is a problem and a potential trigger to get you to 148, 147. And then repeat the same concept on 150. And so you have a potential breakout here and resistance up here. And then it would also be a potential breakout if and when they get to it. Maybe they dip. Do you have support here? If I was to go long, I would want to go long on this dip inside this support zone here. So if it falls to 134, I would go long inside these candles. I mean, against these candles, strong buyers. I don't need them to be at the candles, but that would be like, I will stop out if we lose that. Because if we lose that, which is 130, 131, they'll probably go to 126. So you have the triggers. You have support below, and it could be a potential downside or trigger so close, upside. 23 days until earnings. Accelis. Okay. Decent P&L, it looks like. I feel like down is easier than up right now, short term. There's sellers up here. That is resistance. It is a catalyst. If they take out 141, then they can get to 154. But why not do this first? There's a weakness down here. Unresolved issues with this gap. It is support. So if it drops, would be a better buy the dip moment. Short term. Long term, if you're an investor, that's something else. You got to evaluate your the fundamentals. They look okay. I don't know it very well. It is not a bad place to start longs, but it is not a place I go all in. I'll tell you why. Let's say the market's hiccup on headlines. This one can find itself at 80. Long shot scenario. But this giant hump in the middle makes needing to hold 105 an absolute must. If you do lose it, it's a bunch of downside in a series of lower lows and lower highs. So let me rephrase. The bears are in charge. They've been selling rallies. This is another rally. If they sell it and do this, you'll end up down here in no time. There's no evidence of this. I'm just warning you about it. The taking this out will get you to 160. Okay, so I'm just showing you both cases. In this one, 17 days until earnings. Adobe, strong company. We went long Adobe on a dip. It played out. Good P&L. It's never cheap, so I'm not looking for valuation here. but it's running into a prior high. So this can continue to 630. If they take out the all-time high, they'll get to 680. I don't want to go long into that. I wanted to go long on the dip like we did. Here, I feel like somebody going long now is chasing. They can make money, but why wouldn't they go in long when on a downside? If you believe in the company, track it. When you see a downside, jump in. It's a lot easier way to make money than to chase. So your comments, I'm not sure why you asked. I don't remember. I saw comments, but I think 620 is closer to a target than it is a starting point, especially after a massive day, massive week. Okay. The company in 3 days rallied 5%. In looks like 10 days rallied 9%. Suboptimal to be chasing. And in the short term, the bears are in charge. What do you mean, Nick? Check it out. I'm not making stuff up. This is since November. Lower lows and lower highs. It's a fact until they take out the trend. Unfortunately, you won't find out until it's too late, right? So it depends. Are you trading or investing? If I'm investing, there's no need to be rushing into it. If I'm trading, yes, there's plenty to be done. ADI, Analog Devices. It's amazing that a company called Analog Anything in this day and age has a business. The P&L is okay. It's not that great, but it's okay. They might be the only gig in town. If you take out 202, you can get $10, $15 out of it. You have a lot of buyers below, so good support. Depends on your intention. Traders, yes. Investors, earnings in 24 days. What's it look like on the weekly? So this is an all-time high. Okay, it looks like it had some. All right, so look at this box from a while back. We're still in the box. So that box still stands, right? So for perspective, it's been stuck in the zone for a long time. So if the market breaks out, maybe it too will break out. So if you're holding longs off the bottom, good job. If you're now deciding to go long, you should just be aware that there might be some hiccups going into 202. AEHR. So very tempting to go long based on your feedback on the company. I prepared a write-up, and I don't think I pulled the trigger on it because what just happened, this is a daily chart, is that they triggered this loss. So look at the size of this head and shoulder-ish pattern. Like we're talking $6 or maybe even lower if they want all of it. It's like this much of downside. Clearly that would be like unreasonable, but it just says that's bad. That's what it says. So they're looking for support. They might have it into this area, 12. If I'm long, I'm not adding. If I'm looking to get long, I could nibble. I don't know how much premium it has if I sell puts to own shares, but I'm not going to do that anymore. I don't know the company very well. This P&L is too wonky for me to understand, so I will not do that for myself. If it gets into the 10 area, I will take long shots on it as a speculative bet. You do have support, but it doesn't start until under 14 or 14 or lower. So if I'm long, I'm not adding. If I want to get long, I want to leave more downside downside room. So how much? Maybe another 10, 15%. Earnings in 74 days. Okay, so short term, there's nothing to help you. The support is too old. So now it becomes, can it get help from the market? Okay, decent looking P&L, good bounce off the bottom. If you just went long, good job. You do have resistance into 29, 29, 30, and 31 and change. If you get up above that, you might have some clear sailing with that one. 11 days until earnings. Overall though, is it falling? Okay, so this is a good base. You have double bounce off of a good size support zone. All of this is support. I don't know where, but I know there are buyers below. Look left, they were there. So even if you lose 24.6, you do have buyers scattered. You do have a lot of sellers at 31. So you're going to encounter some sellers up there. 11 days until earnings. Whoa, Applied Materials. Okay. So the person asking, what are you asking me? To go long? Never. Never will I ever go long a stock that just had 3 days like these going into a prior fail. If you're asking permission to book profits, sure. They just rallied 12% in 2 days. Not for me. And I am one to have looked for longs before and looked out for debacles, and I was ready to buy the dip down here. But up here, I don't see the need to chase it. If you're a trader, even a trader, I mean, if you're a trader, why weren't you in on the breakout? I'm asking rhetorically to ask yourself. That's a 10% rally in a couple of days. Not for me. It's priced for perfection. Not saying it's not worth it. It's just not an ideal entry point. Amazon, the company is lagging. What do I mean? Look at the all-time highs. Its brothers and sisters are at all-time highs, if not higher. Microsoft, Nvidia, even Alphabet. This guy is lagging. Great company under its founder. I don't know the new person. I reserve judgment. I'm starting to see some things in my being as a shopper on Amazon, a user of Amazon, that are starting to go, wait a minute, that doesn't sound like Amazon, but nevertheless, it's a great company, great pedigree of growth and innovation. As far as entry point, everything above here has been consolidated for like a year. How long of a period of time is this? 630 days. So you have 630 days worth of seller zone above you. Wow. Right? So yes, they are going to need to push through it, but they're going to need an unbelievable statement like Nvidia. Look at them. Look at the volume, the mountain of yellow. So it doesn't make for a good entry point from that perspective. Short term, you might be able to trade it with the market. So if we have a bullish market, Amazon might take out 157 and get to 164. So I just gave you an investment perspective. Wow, all the sellers above. So don't pile in all in. Leave room to add later on debacles. And I gave you the trade opportunity. You have higher lows attacking a very thin seller. If you take out that seller, you're going to end up higher. So if you hold calls for this week and next, I get it. But you too also should figure out the fact that it will move with Netflix. I wouldn't sell a credit call spread on this one because we're going into earnings. You saw what they did with the earnings reactions on SMCI. Shorting anything right now is very dangerous. Shorting the indices is probably safer than single stock risk. So this is not quite single stock because it'll be moving in sympathy to something else, but mega cap. You know, the mega caps saved the market last couple of weeks. You know, whenever the market was, the mega caps came in and did some unbelievable things and just yanked everybody by the ear. Case in point, on Friday, the small caps were red. I think twice this week that happened. And then the Nvidia exploded, Alphabet exploded, Apple woke up, and Microsoft did its thing. And before you know it, 2,000 stocks followed suit. So credit call spread, yes, but earnings, no. Arista Network, again, I'm asking, what are you asking me? When you guys send me a ticker like this, you need feedback. What kind of feedback do you think I'm going to be able to say? So go all in, or yes, you're allowed to book profits. Don't go all in. I wouldn't touch this. If I love the company, I would say to myself, I would call myself silly for having missed it, and I would call myself silly for wanting to chase it. So I would say, okay, I missed it. Let's put the alert like I did here and take it off my watch list. There's no way on planet Earth I would ever say that. Yes, that's a good idea. Let's get on board because it's going to get to 280. It might get to 400. It's just going to have to do it without me because I am not going to buy the top of anything ever in my entire life. Yeah, load them up. So I don't care how good the company is, and that is a good company. We've traded it on the long side on dips before. Look at the P&L. It's just beautiful, right? If you wanted to say, let's make up a fake P&L, that's the one, right? So up here, no. Next time, have the courage to buy dips because, wow. Yeah, clearly there are no sellers here. There should be buyers here. Very thin buyer. I wouldn't even buy it at 250. Personally, I would want to see it back in the 236 for my own personal taste, but up here, definitely not. So set an alert. So ANF, we had a couple of good days of price action, and then it went to the moon. Last time I will trade ANF because the quotes were bad. We'll see. I have 40 days on the clock. I gave you instructions. If you're asking because I said to go short via put, the instructions were if I'm down X percent, I'm out. So manage that position based on your risk appetite. Clearly, this is a story where the stock price action does not match the P&L. Look at the P&L. There's nothing exceptional about it. And the price stock is like NVIDIA. This makes no sense. This party will end in tears. But I don't want to be the fool holding the put until it dies. So manage the risk in the put that you have, not my expectations of it. I have my own risk tolerances. I shared with you what would be reasonable. You do what you want. There's something going on. The P&L is not it. So let's see here, from here to here. 350% in no time, in under a month. We'll see how it plays out. Don't dig your heels. Don't add. I haven't added. We'll see how it plays out. APA. Is this Arapaho? No. Yeah, energy. You remember the company AEHR where I said it launched a huge Head and Shoulders? Yeah. So this is the same. They lost an important zone they needed to hold, and the downside is this much in theory. So I wouldn't touch it here, because even if it pops, it's in danger of doing this and going lower. So I don't know what is happening with it. You should do homework fundamentally. You do have a lot of buyers below, but I'm not that courageous. I think there are a lot of sellers at 32 to 33 to 34. So if I'm long, I'm not adding. I would reevaluate. Well, this one is exciting from the standpoint where this is a daily chart. It rallied from here to here, and it's consolidating. If they take out the consolidation, they will end up here. So that's going on right now. It's not good that it's down 5% on the all-time high market day. So let's zoom back out and see what's going on a longer time frame. Okay, so on a longer time frame, we see that they lost an area that was critical to hold, and that would be the target. So even if this happens, I would exit completely. Meanwhile, these are not easy candles, so I don't think it's easier said than done to take out 45, but that's your trigger. If you can take out 45, I don't think it's easy because of this as well. So I don't know if I would hold calls. I would buy calls maybe on a dip closer to 38, under 39, or sell puts if it's liquid. I'm not sure. Wait, earnings, 24 days. Oh, when is ANF earnings? 45 days. Okay. We did that. Is that what we just did? App? Yeah. Boeing, the trade is working great. Went long, fell apart after we went long. From that perspective, it's working great that we recovered what we fell on the headline after the fact. And now we have 10 days before the earnings. So make sure you shore up a position. Like if I sold puts, naked puts, I want to have some protection. If I sold the credit put spread, I just need to know to be attentive to it and see if I want to cut some exposure. So if I took 10, maybe I close 2 just in case, and be ready to manage the rest. If it's a small loss, I would close it if I'm worried about the earnings. Honestly, the company has good fundamentals. It's just prone to headlines. and we do have good support from every hiccup they have. They develop more support. We have higher lows. The problem is if we lose 175, we will be at 120. That could be a problem. So we'll see how that's going to play out. If you have any questions beyond that, reach out. You know where to reach me in the chat rooms or the live rooms. Sellers at 228. So I'm not so sure. I want to be very long, like upside hope long. Like I wouldn't want to hold calls. In fact, I am short puts naked, and I'm going to sell an unbalanced set of calls against my short puts to hedge myself that way. It has no competition, by the way. The duopoly is not really a duopoly because there's enough business for both of them to be considered like a monopoly. All right, Bank of America. I'm never a fan of bank stocks, and they've done well. They bounced after a little shaky start to their earnings season, and now their earnings season is done. They did some exceptional things on Friday, and the rally was pretty amazing last week. I think it was Friday. So I'm not so sure how much of that hard work is from them and how much of it is from movement in the TLT, TNX type of a deal. So be careful. If there is a hiccup with the concept that the Fed is an enemy, maybe they're in the line of fire like directly. Like NVIDIA has its own fundamentals that would offset whatever badness comes from a shakeup in the inflation numbers. I'm not so sure Bank of America stock can withstand that. So 35 looks like a great opportunity. I'm not sure that they can take that out. They do have buyers into 29. So I would be a buyer of calls maybe on a dip into 29 or a seller of put. Crypto, you know my story with crypto. On Friday, crypto BITO fell below 19, below 18, below 20, fell into a teenager. And again, like magic hands came in with the magic hands to the market and it sprang up. I still think, now I know that there are some experts out there that I trust that say 55. I say if it is 55, it's a new all-time high. But I think it makes more sense to drop to 38, 35, and today I looked at maybe even 33. That would be a good tradable bounce. I'm not loading up. I only have a core position left. I've cashed out all my crypto looking for a more obvious entry point. Technically, I would vote for a dip. So if you can extrapolate the value in BITO from Bitcoin being down to 38,000, it's at 42. So that's 4 divided by 42. Take that percentage, apply it here. Would say it would make sense better at 1850. Air math. Okay. And I wouldn't even load up. And this is a trading thing. Don't accumulate BITO. It's not Bitcoin. It trades like Bitcoin, but it's not spot price. BJ. Good support below 64. And it must hold 63. If loses that, it goes down to 60 and a half. Let's see here. 39 days. Now I'm asking myself, they keep telling me this is like Costco. Well, Costco cannot stop rallying. If this is like Costco, what's going on? Right? So be careful which one you're investing in. 68.50 is a seller. And if you take that out, maybe you get another $1 or $2. So there's nothing exciting. Bitcoin, we just talked about it. So this is BITO. This is the market cap of Bitcoin. That's not the ticker Bitcoin, but so BTC USD. When you submit it, that's the ticker to submit, BTC USD. Okay. You can see how there's sellers at 42.5, that red line. So it's easy to make 39 just from finding the sellers and curling back down. That's what I'm saying. That is a possibility. If you clear 44, then you eliminate that possibility for now. Blackstone. All right, so I wanted to short it at the top. I didn't, but I wanted to. Fell into a pivot zone. You can see this was a problem. This was a breakout. They just touched it for support. There is a potential. Oh, 4 days until earnings. So there you go. You have 4 days before you get a wild card. The last two earnings were down, downish, down, down. It looks like it rallies into earnings and it drops. And so I personally would not take longs. I would put an alert to see if it goes to 108. Then I would say, all right, now it's better. You do have a lot of sellers into 132. If you take out 132 for whatever reason, maybe they pull in NVIDIA, then you're going to 152, which is another prior fail. Citigroup, I'm not a fan. It seems like there's a lot I don't know about it. Wall Street is not a fan. Lower lows, lower highs. Maybe they're changing their mind. So yes, the rally was huge, but it was off the toilet bowl. So we'll take this out. No need for it. Support into 48, sellers into 55. Ping pong between those two. Who do you think is stronger? Looks like the sellers are sharper than the scattered buyers. So if it comes down to 48 to 46, I like it better than up here. Citigroup reported, yes. Who is this? This Caterpillar reports in 5 days. The XLI did some work, industrials, so Caterpillar was contributor. Strong stock, it has a lot of fans. If you lose 277, 276, you're going to be in the 265 area. So you'll price this out. Is this December 13th? Yes. So Caterpillar has not priced out the Powell pop. Up here, it would be too high to chase. That's no longer correct. And let's see here. This is a daily chart. We can delete that old stuff so we don't confuse people. Okay, those arrows I drew are still possible. They are selling rallies until they take out 290. They're selling rallies. And even if they are, look, rally sold, rally sold. So let's see if I can visualize it from here to here. That didn't work. Anyway, you get the point. So let's do it 2 stints from here to here. So you want to see what happens on the next rally. This was to give you a visual. Cracker Barrel. It fell into a pivot point of 70. Looks like these two candles would constitute a base, and they're bouncing right off of it. They're selling rallies, so you got to respect that. They hit 2 targets out of 3. The third target would be like 62, and if that happens, then you're going to 55, but I wouldn't trade that. For now, you have a buyer below and a seller above. So if you're shorting, you're hoping, and if you're buying, you're hoping. If you lose last week's low, you will end up testing that 64 area, and that would be a nice short. They are selling rallies. Look left. Rally sold, rally. So in order to change that, you would need to be above 84, 85, 30 days until earnings. Conoco, I'm not a fan of this chart at all. So look at it. Battle lost. What do you think is going to happen when they get up to here? Resistance. So this is likely to happen. And then what? Support. Better hold. So if they lose last week's low, they will end up at 101. Better buyers. P&L deteriorating. And it's not a seasonal thing. Look, at least 5. Okay, so be careful with Conoco. If I'm long, I'm not adding. If I'm looking to get long, I would start and leave a lot of room to add more. Earnings are in 18 days. Campbell Soup earnings in 45 days. Campbell Soup is a strange stock. It does well when the markets are falling. It's very bizarre. It hit its highs during the pandemic correction. 46 breach would get you 48, 49. This is a stock I would hold in shares forever, and I wouldn't load up on it or anything. That green arrow I drew might still be in play. A lot of buyers below, so I think it'll be hard to lose 38. So the closer to 38 the starting point, the better. Crocs, very fast-moving stock. As an investment, it's not that bad. I mean, the P&L looks pretty good. It's got a lot of fans and a lot of haters, kind of like Bitcoin. Look at it. Huge seller at 109, 110. Huge buyer at 86. Which one do you believe? We knew that this was a possibility. It paid it. We knew that this was a possibility. It paid it. And to the penny. Is this a coincidence? What I'm saying. This was our target 1. And this was our target 2. And look at target 2. And look at what was above. I don't think that's an easy feat to get to 118, 120. But that's what the bulls are hoping. I would buy dips into this candle for this opportunity. I sold puts in it, and it was very hairy. It was not easy. 25 days until earnings. Wow, look at that move. Whew. See what I mean? 20% in a day. What? Holy moly. Okay, Carvana. I don't like the fundamentals. They're getting better, but I don't like them. And I don't know about the car market. I think we have a car market crisis coming. I just can't believe that nobody can buy a car without having to pay $600 a month. You can't. Go try to buy a car. Used, new, I don't care. You're going to pay $600 a month. It used to be a luxury car payment not too long ago. So something is weird going on in the car market. And I don't think it's just pure straight up prices. It's like magic math. It's just bizarre. I mean, there were $30,000 and $50,000 cars before. But now it seems like you buy a Corolla, it's $600 a month. you buy I don't know, Mercedes, you can get one for $600 a month. It's pretty weird. So anyway, don't like Carvana from that perspective. I think it gets to 38 easier than to get to 50. But it is a stock that can rally fast, so be careful shorting it. And if they get to 38, I think they get to 30. And they have 32 days before the next earnings. CVS, not a very well-liked stock. It was falling for a long time. All right, we have lines. Let's see. Look at that. I thought it would rally and drop. It rallied and it dropped. It rallied more than I thought, but it hit a resistance zone. So if you got out in the 80s, let's say you got stuck in the 70s, stuck long and you got assigned or something and you went down to 66 and you didn't get out in the 80s, you need to talk to me because that was like a thank you very much. I cannot believe you gave me this opportunity. Look left. This was a zone that they used for a breakout. They used to hold, and then lost in a big way and then gave you an out right at it. That would have been an out. Now they do have buyers below and earnings in 17 days. DataDog. Now you need another miracle rally to get out. Good movements, good strong push, good company, but you waited too long. If you now want to get long, if you're a momentum trader, I see the need to follow above 124. It can get to 144, 148. If you're that type of person, fine. If you're an investor looking for a good entry point, please take 20% and not more. That would be mine. Because markets are priced for perfection. This guy is up in the stratosphere looking back a couple of years. And now I feel the need to chase it. Just be careful. Buy the dip at least. Are you trading? Are you investing? Make sure you know which one, and I would not go all in on either of those two scenarios. Okay, we've traded it for the long side. Same with Deere. Okay, they popped. If you missed it, they're giving you a drop to a half of it. Earnings in 26 days. If the markets continue rallying, this one could be at 395. So I don't mind being long tactically. But you should know that there are sellers above here scattered. All of these are sellers. A high point of volume is 392. If it gets there, I would be out. Look left. There's no volume where we're at, so it's easy to move up or down. DFS. I missed the earnings. Maybe I'll add it to my watch list. We traded that one last year. We sold naked puts and they worked out during the financial crisis. At the tail end of the financial crisis. So maybe I'll repeat it. I don't know what they said about their P&L on their earnings, but I'll check it out. So if you're looking to invest in it on a dip, I get it. If you're looking to trade it, I get it. There's some buyers at 94 and 91. I don't know if I would hold calls though. If I wanted to, I would do a call spread, debit call spread and out in time like a slow moving trade. Digital Realty, 25 days until earnings. Okay, that wasn't there. Oh, look at these two things. We'll take those out. All right, so we're stuck in a box. How about this? If they don't take out 140, they're at risk of coming down to 130. They have a lot of sellers above here. They need to hold 134. If you lose that, you test 131. If you lose 131, you get to 126. Meanwhile, 140 is a nice catalyst. So you have catalyst at 140, but it is resistance until then. Buyers at 130, and a better hold if we get there. Devin, like Conoco, I don't like it. So I said, yes, it does have upside path. I think I was answering one person in particular. But I drew a box and I said they better hold it. Otherwise, they do that little squiggle. And they are at this little squiggle. And they're down here. That's not a target, by the way. It's open season anywhere. Look at these back in September 2021. The drunken years of COVID, stock market trading. So it's falling into a pretty pivotal zone. If you look past it, this was a huge problem. They fell below it and they cut through it like butter. That was wrong. So now I honestly don't know how good of a floor it has. Maybe 35.8, 36. But I can tell you one thing, they're going to sell rallies like they have been. So the rallies, if they come, you should fade them. Use them like they're not going to last. Just use a prior one as a visual. Prior, visual. You see it? I mean, they're a little bit, not all the same size, but expect it to fade. And if it does fade, will it make a lower low? Pop, fade, lower low. That type of a deal. I don't think they get to here. I think this is a good spot. P&L wise, just like the other one earlier. Conoco, was it? DWAC. Okay, I can't believe we're talking about DWAC here. These stocks are meme stocks. The chart's not going to help you. I mean, there's no income. It's nothing but spending. It's headline. It's pure headlines. Not sure what you want me to say. If you know how to trade meme stocks on headlines, go for it. The chart's not going to help you. Sellers above 28, buyers below 22, but I can't tell you it won't be 17 in 2 hours or 75. So we don't know. There's nothing going on. So follow the news. Follow exactly what they're doing. How are they going to, where's the upside? Are they going to be in business? Follow the news. All right. So we are done with video number 1. We will stop